Hello. Welcome to our channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my video for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, finally I'm back from my vacation. Many things happened, many things. When I went to the vacation, gold was around 1825, 1830 level. Remember, I had a buy position on gold at 1820. I forgot about the position, and during the vacation, I reinstalled TradingView and I saw that gold crossed 1900 level and I was blown away. And yes, because of the ongoing tension between Israel and Palestine, market sentiment is extremely bullish. No need to look at the other things right now. No need to look at DXY. Simply focus on the chart of gold. Okay, because market is extremely bullish because of the ongoing situation. The vacation was good. I missed the market, but yes, every year I take a vacation. I take a vacation from the market, okay, because our brain needs rest. You can see that there's tan on my face. Okay, now let's discuss about the market. Right now, gold is standing at 1948 and gold made a high of 1962. If you guys remember, I told you guys that there is a high chance that around 1820, if gold reverses, there would be a big jump of at least 1000 pips, and we got the jump. There was no news of the war at that time, but still, market was giving us indication of a big trend reversal, and I told 2-3 times also. And one thing I have understood after trading for more than 10 years in the market is that there is no coincidence. Market knows everything from before. Probably market also knew about the ongoing crisis from before. As a result, market was showing us indication about the trend reversal. So positional traders, swing traders, if you have any buy position on the chart, on gold, then you don't need to worry. Enjoy the trade because further upside possible, because the market sentiment is driving. So as a result, you don't need to do anything, just sit and watch the market going up, because further upside possible. And if the tension remains intense like this, then obviously gold will be heading towards 2000 level, and there is no doubt about it. You can see here gold rises amid rising geopolitical risks. Forget stocks, gold enjoys a moment over the past year as it hurdles toward 2000 level. So overall, this is the condition of the market right now. So if you have any buy position on the chart, nothing to do, well, just enjoy it. And if you're a day trader, then, and if you're looking for fresh trading opportunities, then what you can do is you need to wait for the right moment. But I would like to suggest one thing: it doesn't matter whether you're a scalper, day trader, but in this type of market situation, you should take a position and try to sit on the position for a couple of days to couple of weeks, because sometimes market gives you opportunities that you should not miss. And every year you will get 1 or 2 opportunities like this where you can make a good amount of money, that as a day trader that you can only make after trading for a month or more than a month. So you should not miss this type of trading opportunity. And right now, Joe Biden is also, US President Joe Biden is also in Israel right now. So there will be some developments. But one thing I would like to tell you guys is that, see, market is responding to the news very well, but you should also know that market also has a very good digestion. So if the same situation continues for the next couple of days, then there will be a pause on the chart of gold, because the market will be digesting the fact that there is no end to the war right now, just like the Russia-Ukraine war. Because gold was extremely bullish when the war started, but after a couple of days, market understood very well that the war was about to continue, and as a result, market stopped responding. Same thing may happen on the chart of gold here as well. Market is responding well right now, so this week we can expect the market will remain bullish. But if the market sentiment may change by next week if market sees that there is no end to it. So positional traders, swing traders, if you have a buy, be on the trade, but you need to be a little bit vigilant by next week. And swing traders, and let me tell you, Right now, market is struggling around the resistance here, and you can see that market is not coming down for retracement properly, and the problem may be on the economic calendar. You can see we have news coming up. First of all, initial jobless claims, and then we have the Fed Chair Powell's speech. So two big events. So there will be some crazy volatility in the market, and there is a chance, high chance, that market may remain clueless before the event, because before a big event like this, market usually prefers to stay silent, and you need to be careful with your ongoing US dollar position, not only on gold but also on NZD USD, Euro USD, GBP USD, and others. And try beginners, new traders, try to close down your dollar positions before the news, because of high volatility. Okay, you may get a bit of a heart attack, and I don't want that. You also don't want that. Try to close down and do not gamble with your hard-earned money and capital, because at the time of news, because of high volatility, the technicals may not work. Okay, so be careful. Okay, first of all, we have a trading opportunity around, you can see 1925, around 1925. You can see 1925, we have the first trading opportunity where you can look for a buy position. Why? Because overall the chart is in uptrend, there is no doubt about it. You can see the 50 moving average beautifully playing the role of dynamic support here. So if market breaks the dynamic support here, then the next big support on the chart of gold is around the 1925, 1926. Why? Because we have the previous resistance acting as support here, previous resistance acting as support here. Then you can see we also have FIBO 23.6% retracement level, and we also have the 100 moving average. So around 1925, 1926, we can expect that market will get a good support. Means in this type of market situation, buying at dip is the best trading strategy, isn't it? So whenever market will come for retracement, okay, this type of support you can expect that yes, this is a good level to buy. So if market comes from 1925, 1926, we can look for a buy. But as I said, that the 50 moving average is also playing the role of dynamic support here. So if you see the market is going for retracement, and the market is not showing selling pressure, okay, in that case you can also expect the 50 moving average to act as dynamic support. In that case, around 1935 also you can expect a bounce. So considering the market situation, be on the side of buy and enjoy the trade. And if you're looking for fresh opportunities, then you should obviously look for buy at dip. Okay, and in this market situation, we have two levels where you can look for a buy position. First of all, 1935, around 1935, not exactly 1935, because 50 moving average is a dynamic support. If market takes support and bounces from the 50 moving average, you can look for a buy position. Otherwise, the next buy opportunity, or the best buy opportunity, is around 1925, 1926. But you need to wait for some time. Okay, once you'll see the market is going for retracement, just observe the market on the 50 minutes time frame, 1 hour time frame, when market will be entering the zone. If you see the market is showing price reaction from below, click on the buy button, but yes, follow proper risk management. And as we can clearly see, the market made a high of around 1963. So in this type of market situation, we also see that sometimes market doesn't come for retracement and market starts going up. If that happens, you can look for a risky buy above 1950 as well. Why risky buy? Because the market made a high of 1963. So if you want to take a buy above 1963, that you can do. But if you also have a fear that you may miss the opportunity, then yes, above 1950 also you can look for a buy. But at every step, you should not risk with your capital. Go with proper risk management only. Okay, and especially at breakout and breakdown trades, because there's always a fear of false breakout. So you can also look for a buy above 1950-51 level if you see that market is not coming for retracement, rather market is very bullish. Okay, and if you're wondering about resistance, then my dear friend, forget about resistance, because if the market remains bullish like this, then resistance will not work, because after all, fundamentals are driving the market, so the technicals will lose. So use the technicals for entry and exit purpose only. You can use the resistance for exit purpose right now, not for taking a sell position, because you may be a day trader, but taking a sell at resistance can be a little bit risky. If you have the experience, if you have been an experienced scalper, then that's a different thing. Otherwise, okay, it is better to avoid sell right now at resistance, as long as the market situation sentiment or situation remains like this. Okay, I'm making video after many days. Okay, so I'm feeling a little bit weird. Okay, maybe it will take 1 or 2 more days to get into the flow. Anyways, thank you so much. Bye bye. Take care, and thank you so much for all the love and support, because I have received a lot of messages that, sir, where are you? Abhilash, where are you? Thank you so much for all the love. Bye bye. Take care, and please do not gamble with your hard-earned money and capital. Okay, this is market. Market is not going anywhere. Okay, wait for the right moment and opportunity. Bye bye.